Good morning and welcome to this weekly market update from AGM Markets. Today is the 31st of March 2014. All I'll do today is go through some technical analysis on Euro, Dollar, Cable, Dollar, Swiss, Aussie and Gold. Just to review what has been going on in the markets over the last week since we did last week's video, and give some sort of outlook for the week ahead. First of all, let's have a look at the Forex calendar, see what news is coming out. So already we've had some sort of mid-tier data where we're actually with the New Zealand business confidence overnight. Came in at 67.3 from the previous 70.8. In terms of high impact news, in terms of the sort of majors where like the Euro, I mean we haven't looked at the Kiwi chart in a while. We could perhaps do that next week if any of you, if you want to comment on the YouTube video, whatever page you want to have a look at, we can definitely do the Kiwi. So in terms of high impact news for us today, 10 AM, got the Eurozone CPI flash estimate year on year. Forecast is 0.6% from the previous 0.7%. Now at 1:30 we've got Canadian data, the GDP month on month forecast 0.4%, from the previous poor figure of minus 0.5%. And at 2:55 PM we have the Fed Chair Yellen speaking, so keep an eye on that. That'll be very volatile, I would have thought. And at 6:15 PM we have the Bank of England Governor Mark Carney speaking as well, so should be some interesting moves in the markets to start off the week. Tuesday overnight we have Chinese manufacturing PMI forecast 50.1 from the previous 50.2. We have the HSBC final manufacturing PMI, which is forecast 48.5, the same as the previous. And more overnight in terms of Aussie, with the cash rate is forecast to the rates to stay the same, and of course following that we'll have the RBA rate statement as well. Then you've got quite a bit of mid-impact news. I mean, German unemployment employment change can move the markets quite a bit. It depends. I mean, because you've got the Spanish manufacturing PMI and Italian. If they're both better, then obviously we should get a pop in Euro. But if they're both sort of mixed, then it would tend to stay flat normally. At 9:30 AM UK, we have the manufacturing PMI, which is forecast to stay the same from 56.7, the previous 56.9. And at 3 PM with US ISM manufacturing PMI, a big piece of data that, forecasting a better number, 54.2 from the previous 53.2. On Wednesday, got some more overnight Aussie news with the building approvals month on month, forecasting a much poorer figure from the previous was 6.8%. We were expecting a drop. Not we are, this is Forex Factory by the way. The sort of the overall consensus, most of the forecasts will be very similar. Forecasting minus 1.7%. Then 8 AM you've got Spanish unemployment change, and then it's mid-tier, but it can move the euro quite a bit. At 9:30 we've got some more UK news with the construction PMI data out. Forecast here is slightly better from the previous. Previous was 62.6, expecting 63.1 here. And at 1:15 PM we have the ADP non-farm employment change data, forecasting 192,000 from 139,000, so a bigger number there. And then overnight on Thursday, more Aussie data, so it's all about the Aussie this week. We've got the retail sales month on month, the trade balance as well. Retail sales, the forecast here is for worse figure than last month. Last month's 1.2%. Forecast here is at 0.4%. Then you got RBA Governor Stevens speaking overnight as well. And in terms of more high impact news, you've got more UK news services PMI forecast 58.2, the same as the previous. And then at 12:45 you've got the from the Eurozone, the minimum bid rate. That's expected to stay the same at the low rate of 0.25%. Then at 1:30 you've got Canadian trade balance, you've got the ECB press conference, US trade balance, and the US weekly jobless claims there as well. The forecasts are fairly sort of in line there for both of them. And at 3 PM you've got the ISM non-manufacturing PMI forecast, a better number here. Above 50, I think the 50 is always the sort of key line in the sand. Above Above 50 is always good. And this is forecast for 53 spot 5 from the previous 51.6. And to round the week off on Friday, in terms of the high impact news, you've got some more Canadian data. So you've got unemployment change and the weekly jobless claims. Not the weekly jobless claims, sorry, what am I talking about? The unemployment change and the unemployment rate. Forecast here is 25,300 from the previous minus 7,000, so a much different number there in the previous. And the unemployment rate is expected to stay the same there. But to round off the week, as it's the first Friday of the month, we have the US non-farm employment change figures. The forecast here is 196,000 from the previous 175,000, so we're expecting a bigger number there. And the unemployment rate is expected to fall here, so a lot of bullish forecasts out for the non-farm payrolls. And also at 3 p.m, the final bit of high impact native energy trade there, the Canadian dollar, got the IV PMI, which is forecast at 58.3 from the previous 57.2. So a lot of news out this week. It should be an interesting week. The first week of the month is normally tends to be quite decent, to be honest with you, because there is always so much data out, as evident by that calendar. Okay, now let's have a look at the charts. I mean, I've left most of these charts from last week just to sort of see what has happened since the last week's video. I mean, you can always start from clean charts, but I thought I'd just leave them up because a lot of things are still in play. For example, this euro-dollar weekly chart. It's the same move that we spoke about last week. I don't think there's any other interesting moves, to be honest with you, on this weekly chart. As we're doing these videos on a weekly basis, this is the move, which is the key focus. This is the fib from the low of the year to the high. Last week's weekly candle, we came down, we tested the 50% and we closed above. Also noticed those previous highs there as well in 2013, acting as new support as well for the moment. But it is a red candle, so it's not exactly a bullish reversal, but the lower wick, as it's come and tested that level. I mean, what I'd expect this week, to be honest with you, is a fall at the start of the week and then perhaps a rise at the end of the week, forming a decent lower wick, and perhaps in a sort of similar candles last week, but a more bullish one, I'd have thought. But there's nothing stopping it breaking lows, perhaps testing the 61.8 and then forming a better sort of hammer, really. But it's all about this setup. I'm sure we'll be keeping this that fib up for the next sort of few weeks, definitely. And you can see there on the daily, so what happened last week, we had that fall, we had a few bearish candles there, we came down, pierced below this 50%, buyers coming in off the sort of 100-day moving average and the 50-day moving average here. It's the 50 days, sort of the real decent moving average here. You can see even today's candle sort of opened, came back down, tested this 50-day and closed above. So yeah, nice technical stuff there. We spoke about last week, this 50% should be a key level because we had that previous support there and previous resistance here as well. So it's acting very, very technically. I'd say the odds are for a rotation towards the upside, towards these 139.66s over the next couple of weeks. In terms of the shorter term charts, I mean the 4 hour in terms of sort of selling opportunity. Remember we spoke about this move, so that fib there from the highs to the lows. We have sellers coming in at the 50%. So the aggressive sellers, I'd have thought, would be looking at this sort of smaller fib here. So taking that dip of where we bounce off the 50%, bringing the high down to that recent swing high, and looking at this move. And interestingly enough, the moving averages are sort of coinciding with that 50%. So if you do get a brief bounce up, the price action could get quite interesting at that 50%. But they're the only two setups I'm majorly focused on, and I think most other people will be focused on as well. So you've got that fib move there, and then the big one here where the bulls are trying to keep it up. So interesting stuff. The euro will definitely be a key chart over the next few weeks, I'd have thought. Cable, I've left this up from last week because it's the chart in play, really. You can see on this 4 hour we are hovering around this 50% from the highs of the year to the recent swing low, getting stuck around this 50% here. Interestingly enough, we did get a daily candle close above this 50%. well, it sort of opened above it. But you can see we got some previous resistance. I mean, you can see we got that fake close above that as well, and we came back down. So interesting level. You can see if where I'm hovering my cursor over now, it's previous resistance as well. So I'd not be surprised to see it come back down off of this 50% level. Be key level. The next couple of days should pretty much define that, to be honest with you. And then yeah, and in terms of the bulls, the aggressive buyers, I would have thought they'd be looking at this move here. So I've just flipped it to the 4 hour, and you're looking at that low there, to that swing high. Let's say this is the swing high we've topped out. If we do get a bit of retracement off of that big 50% level, then this would be the interesting fib, I'd have thought. And another reason why it's interesting, I think, because this 50% coincides with previous support as well, and this 50 SMA is sort of starting to line up with it as well. So you could, if we do retrace down, we could get some interesting action at that level. And it's the same on the 1 hour chart as well. In fact, it's easier to sort of find on the 1 hour chart if you like trading off the 1 hour. It's pretty much just the low of the 1 hour chart to this recent swing high. But of course, 166s will have something to say about it as well, because it has acted as decent support. But if it does come down, it will technically be a sort of triple test, and triple tests tend not to hold as well. I mean, if you imagine it being a sort of a floor in a house, the more times you bash on the floor, the more chance it's got of cracking and breaking, and that's what tends to happen on triple tests, in my opinion. Dollar Swiss, let's flip it to the so we spoke about dollar Swiss in terms of this weekly. It's all similar to euro. We talked about the euro, we're looking at the fib from the low of the year to the high. Dollar Swiss has pretty much been a mirror image chart for the last few months. So we're looking at the fib from the high to the low of the year. And I said last week, I still think it's just looking to sort of grind up towards this 50%, and that's what we had last week. We had another sort of grind bullish continuation pattern, but we did get caps at these 0.89. As you can see, they're pretty much tested the pip. We said previous support could act as new resistance, and that's what we got last week. You can see that there on the daily chart. On the daily chart, a nice candle. It didn't quite test it to the pip, I mean, but it's pretty much a couple of pips off. But similar to euro, it really has been a mirror image chart. This similar to euro. What did we say? We're getting support off the 50-day moving average. Surprise, surprise, on dollar Swiss, we're getting capped at the 50-day moving average. So yeah, a daily candle. I mean, as long as the daily candle closes below, then I don't think we'll get this 50%. But in order to get to that 50%, we definitely need a daily candle close above that. That's the key indicator, in my opinion, on this daily chart. And in terms of the bulls trying to push it up to that 50%, on the 4 hour, I'd say, or it will be the same on the 1 hour as well. This sort of fib here, so from the recent swing low, or the low of the 4 hour chart to that recent swing high. It's not the purest of fibs, because it has been sort of chopping around, but what is interesting, I think, is we do have previous support at this 50%. I mean, pretty much a spike there to the pip. You can see where I'll hover my cursor over now, off that 100 SMA, and that big spike there and close above. So if we do start to retrace, which it looks like it wants to do, keep an eye on this 50%, and also the 100 SMA sort of flattening out here as well. So when they flatten out, they do tend to act as better sort of support and resistance levels, I think. And that's pretty much it on the dollar Swiss, I'd say. So you got the big fib there, and then on the 4 hour, and it's the same on the 1 hour. It's the same sort of move. I mean, I'm not really interested in looking at these sort of smaller dips here. I think they're a bit messy. But I mean, yeah, a lot of people obviously will probably be looking at this sort of move here, but it's not the greatest of fibs in my opinion. But it has been acting fairly technically. You can see off that 61.8 there, we've got nice spikes below and closes above. But now I prefer to look at the more sort of obvious fibs. And yeah, that's pretty much it on dollar Swiss. Let's have a look at the Aussie. Aussie, we spoke about this fib here from that previous swing high from 2013 to the low of 2014. We thought the 50% may act as decent resistance, but it's just sliced through that through butter. You can see that on the daily, no sort of even on the 4 hour, I don't think we didn't really get any sort of selling action at the 50%. It just really blasted through that. So the sellers wanting to keep this trend down. We'll be keeping an eye on the 61.8 if we get there, but the 50-week moving average is currently capping it at the minute. But no, I'll definitely still keep this fib up, because if we do come to the 61.8, there's nothing stopping it acting as resistance. In terms of the shorter term charts, the daily, it's hard to sort of pick a recent sort of swing low on this daily. I think it is quite interesting on the 4 hour though. This is definitely the recent swing low, and the reason I say that is because it was a big sort of dip zone on that previous fib, which I've just drawn up off that 61.8. So extend the low there and then extend the high, and that should be an interesting move if we do get down there. You can see the 0.9135 is a key resistance around here as well, and that hovers in between the 50% and 61.8% retracement zone. So if we do get down here, we could get some interesting action in between this range here, and that's pretty much the same if we flipped it. If any of the sort of 1 hour chart traders, it's exactly the same move. It's nice and easy to see actually on the 1 hour, because it's just the low of the 1 hour chart to the highs. So I mean, I'll personally be looking at it on this 1 hour chart, see if we get any sort of nice 1 hour reversals if we do come down here. And yeah, that's pretty much it in terms of the Aussie. Nothing really interesting on the shorter term stuff, so it's the same move on the daily. In fact, on the daily it's quite interesting to see that move, because you do have the 200 SMA sort of line up in between there as well. So by the time it comes down here, we could get that 200 SMA pretty much flat, bang on that sort of 50%, or even this the pink line there, which I've got the 0.9135, which was that previous resistance. Let's have a look at gold. I've left this chart up from last week. This is, well, if we look at the weekly or even the daily chart, you can see a lovely fib move here, pure uptrend. We retrace back down, and now we're getting starting to get bought up off of this 50%. Nice sort of daily reversal there. On the Friday we've got a little green candle, but you can see it is getting capped at this 200-day moving average. So key indicator there for this daily chart. Really needs to get a daily candle close above that to get any sort of momentum. Then it's got to fight the 50-day moving average as well if we get up there. So that's the weekly and daily, and on the 4 hour I'd still leave this fib up there. The bear's trying to bring it back down off the 200-day moving average. They'll be looking at this one here. So if we do get any sort of bounce off this 50% retracement that we just had on that daily chart, this should be an interesting fib, I'd have thought, because it's a nice sort of pure downtrend. If you get a sort of a smooth, clear retracement towards the 50%, and when I say sort of smooth, like clear retracement, I mean it doesn't sort of chop around, go up and down, left and right, and then go up. It just means a sort of standard uptrend towards the 50%. They tend to act as you tend to get better action at the retracement lines, in my opinion, because it is just a pure retracement. So, but anyway, that's the move I'll personally be looking at. I thought a lot of traders will be keeping an eye on that move, and it's the same on the 1 hour chart as well. So it's a high of the 1 hour chart to the low. Okay, that's all for today. If you want me to have a look at any other charts next week, then feel free to comment under the YouTube channel. I hope you have a great week trading, and I'll catch you next Monday. Thanks for watching.